Hello, I'm Jeffrey Ham, equity analyst for Briefing.com. Today's Thursday, March 13th. On Thursday, positive comments from a major credit ratings firm managed to lift the market from negative territory, with the S&P 500 ending the day with a 0.5% gain. The stock market was down as much as 2% on worse than expected retail sales and reports that another hedge fund may collapse. Standard & Poor's said the bulk of write-downs on subprime securities may be behind banks that have already announced their fiscal 2007 results. Standard & Poor's said, quote, "The magnitude of some write-downs is greater than any reasonable estimate of losses," end quote. The firm noted Citigroup and Merrill Lynch have taken conservative valuations. Standard & Poor's said write-downs could reach $285 billion from the current level of $150 billion. The firm's forecast is much lower than other estimates, including UBS's. UBS said last month it expects firms will face more than $600 billion in write-downs. The financial sector saw the largest boost from Standard & Poor's comments. The sector was down as much as 4% on renewed credit concerns due to reports that a Carlyle Group fund is close to collapsing. The Thrifts and Mortgages Group saw a huge lift after being down as much as 5.5%. Representative Barney Frank wants the government to pledge up to $300 billion in loan guarantees to help stem foreclosures. The financial sector's gains were somewhat limited by weakness in AIG. The insurer was downgraded to equal weight from overweight at Morgan Stanley. 9 of the 10 economic sectors posted a gain, led by materials, which finished up 2.1%, and energy, which finished up 1.4%. Consumer staples underperformed on a relative basis, ending the day unchanged. In economic news, February retail sales fell 0.6%, worse than the expected 0.2% rise. When excluding autos, sales fell by 0.2%. The consensus estimate called for a 0.2% increase. On a somewhat better note, there were 353,000 unemployment claims filed for the week ended March 8. This was unchanged from the previous reading. Claims are high but have not spiked to levels that were seen in the 1991 and 2001 recessions. The dollar fell to record lows. The dollar bought less than 100 yen for the first time since 1995, before recovering a bit to the 100.66 yen level. The weak dollar aided a 0.8% surge in the CRB commodity index. Gold hit an all-time intraday high of $1,001.50 per ounce. Meanwhile, crude hit an all-time high of $111 per barrel. I'm Jeffrey Ham for Briefing.com, and thanks for listening.